It's an opportunity for us to present to you the examination context for how we're going to implement the Illinois Community Reinvestment Act as to covered mortgage companies. So we're looking forward to sharing as much information as we can. Let me start with some introductions about some of the department people that are on the presentation. Then I'm going to go into some disclaimers that I have to read, and we'll take a look at the agenda. So introductions, of course, we start with Director Susanna Soriano. She is with us. Many of you have seen the director give presentations on our CRA program going back to the period when, we implemented the act. So she's been busy with this effort. And thank you again for being on with us today, Susanna. We have Stephen Johnson's with us. He is our Public Information Officer. Thank you, Stephen. Dara Perryman is with us. She is our Director of Policy for the Division of Banking and does some incredibly invaluable good work for us. Finally, there's myself and Ed Williams. He's a former accountant. Ed Hill. Ed Hill is with us, and he is our DOB CRA supervisor and is going to be giving about half of the presentation today. And Ed, we're very pleased to have him on board with our team because he has a lot of extensive background in the private sector, specifically with CRA implementation and compliance. So that's Ed Hill. My name is Mike Garvin. I've been with the agency for a while, so if you've heard of me, I've been around a while, and part of my time, I really am proud to say that I worked as the manager for our mortgage company traditional examination team. I refer to REMLA, our Residential Mortgage License Act, and so we've been busy with that, of course, for many years, and it's interesting how this new CRA examination program is going to have some similarities, but some dissimilarities to the traditional REMLA exams that we've been doing with our licensees. Let me read a disclaimer here before I go any further to do the legal stuff. The information and views shared in this presentation are those of the author and do not represent those of the Illinois Department of Financial and Professional Regulation. The information contained in this presentation should not be construed as legal advice or as a formal interpretation of the Illinois Community Reinvestment Act or rules. So that is our disclaimer. So the next page you'll see there is what we've got kind of on the first page of the agenda. We're looking at about 25 pages of content here. Ed, I'll do the first half. Ed's going to do the second. Yesterday, we gave the same presentation. It worked out to be about 45 minutes with about 10 minutes of questions. So we've got the hour. Hopefully, we've got plenty of time, and certainly invite and encourage anybody who's got any questions or comments to take the time to do so. We want this to be a dialogue, a collaborative effort, and all questions are welcome. Yeah, we're going to be talking about, the CRA. What does that basically mean? It's the affirmative obligation under the law for our licensees to get out there and to increase extending credit into what we call LMIs, low to moderate income areas, neighborhoods. On the agenda, you're probably familiar with the assessment factors that you see there in bullet point 2. We'll talk about the performance test, the assessment factors. There's 9 of them, and those 9 that apply to mortgage companies are the same assessment factors that are under the act that apply to also the banks and the credit unions that are under the CRA statewide. The performance tests, there's basically 2 that are applied to our covered mortgage companies. The lending test and the service test, we're going to be going over some detail on both of those. I will add as just a footnote, a service test is a little bit of a generic term, and don't be confused. That is not referencing mortgage servicing that a lot of the big mortgage companies have on their, part of their portfolio and their makeup and their organizational structure, as opposed to loan origination. So service test is something that we're going to talk about specific to the CRA and CRA credit. So with regard to the service test, you see that next bullet point, there's a lot of community development opportunities and details that Ed is going to go over some of the related features of the exam process, including ratings, the data it is going to be required to be produced. You're going to actually get to see a pre-exam letter with an attached information request that would go over a lot of the content area that you'll see when the exam starts. And that is, I talk about the similarity with REMLA exams. You've all gotten the pre-exam letter and the information request on the REMLA exam. So the similar type of document is what would start the exam process here. You'll get a chance to see that. We could talk about, what the content that you expect to see and what, we call it the report of exam, but under CRA, it's called the evaluation report. The notices that need to be posted in hopefully, again, plenty of time for question and answers. Okay. So that is the framework for today. So on the next screen, you'll be able to see kind of an overview and the one point that we want to start with in terms of the overview is a lot of the CRA brings to mind, assessment areas, assessment maps, the idea of a LMI, a low to moderate income neighborhood being a location. That is all very much part of what we're going to be looking at. But please remember that the law is written to encourage the extension of credit on a statewide basis. And the way that, I know that your companies, the marketing opportunities that are offered throughout the state, the technology that you have, and all of that comes into play here. So it's probably something you're already ahead of the game on. But the CRA affirmative obligation is not just the limited neighborhoods, but we like to think of it as a statewide obligation. I also want to mention the middle bullet point here. Something I'm going to kind of try to emphasize is that we like to build in a fairness aspect to what we're doing as a regulator in terms of conducting these exams and evaluating you all. We're not going to look at you in a vacuum in terms of a lot of technical requirements. And you can see an example there. The whole program assumes and continues to take into consideration safe and sounding lending practices. So we want you to continue to engage in your safe and sound lending practices for sure. The bottom bullet point there, you see how there's reference to underwriting credit decisions and commitments. Those are basically the terms that define a covered mortgage company, which is why you're on the call here. If you're covered, you engage in any of those three types of activities as part of the loan origination process. Okay, moving along quickly here. We have the assessment factors. I'll also add, by the way, to the top right there, you'll see 1055-200. That is the administrative rule that lays out these assessment factors, the same 9. And it's really helpful to remind yourselves in terms of preparing for the CRA and how you want to train your staff is to actually dig in specifically, not so much into the act, which is very brief, but the administrative rules for the CRA for mortgage companies. They're very detailed. And most of what we're going to go over today is from those rules. And this particular rule is 1055-200. For looking that up on the internet, you could just type in 38 Illinois Administrative Code 1055, and that should get you to like the table of contents for the rules, and this is specifically Rule 200. You'll see that there's 9 assessment factors. The one big takeaway, again, I want to offer here is there's a positive aspect to the factors, and this is, again, this is the context that we look at how we hold our licensees accountable, how we implement what the expectations are. There's a whole lot of positive things that can be done, but we'll see as we look at the bottom of these factors, there are some, what I would say, negative things. This is the type of misconduct that we do not want to see out there, things that would certainly lead, when we talk about ratings, so very adverse ratings and potentially some things that would end up in enforcement. So the positive side, look at the first 3 bullets there, okay? The first one, in order to be successful under the CRA, you really need to know about these LMIs. You know, you need to know the demographic makeup of where you're doing business. You need to know where the low or moderate income borrowers are, and you need to know where the properties are. And then, you know, you want to market and you want to make all of the services that you provide, you want to make sure that there's some specific inclusion for and in the LMIs. And obviously, when it comes to one of the two tests, we're talking about the lending test, the origination of, you know, of letting an LMI borrower get into a home is what is, you know, the primary credit that we're talking about under the lending test. You'll see that the ability for you as a licensee to keep the borrower in the home is also an opportunity under the lending test. So, you know, helping borrowers in delinquency, and we'll talk a little bit more about loss mitigation techniques, et cetera, when we get to the specific lending test. Number 4 there, you can see how this is a kind of a banks and credit union thing. That's really not where you guys are. Let's go down. Number 6, I mentioned helping delinquent customers. That's an emphasis. 7 and 8. This is where we have to take in consideration origination of loans that show an undue concentration and systemic pattern of lending resulting in the loss of affordable housing units. And then number 8, we have to look for any evidence of discriminatory and prohibited practices. Those are the negative things that definitely would result in very, very adverse ratings and other consequences. So that's built into the main assessment factor list, which is the highest level of objectivity as to how we start looking at responsibilities here. So if we go to the next screen, okay, this is under Rule 210, which is also applicable kind of a higher level. It talks about references the tests. Those tests are the lending test and the service test. And here's some performance context that comes into play. You know, again, right here, a lot of it is, you know, knowing your data and also understanding that the way we're going to go about this from a department or regulatory point of view definitely involves fairness. We want this to be a fair and an opportunity for y'all. I do want to mention something with regard to ratings that comes under this rule. And it says that a licensee with a rating of satisfactory under both the lending test and the service test, to the extent you have to do the service test, may allow the licensee to get a rating of outstanding based on the examiner's review and evaluation of the licensee's engagement in qualified investments and community development loans. Now, qualified investments and community development, there's a certain amount of detail there. I'm not going to go into that right now, but I will say, thankfully, the definition section under the rules is extremely helpful. There's a lot of good stuff there, and both of those terms, qualified investment and community development loans, are defined for you, and you can get an understanding of what does that really mean. We are going to go into some detail on another screen, but wanted to mention that with regard to the rating process for both the lending and service test. Looking at the bullet points, number 3 there, as much as we could talk about context and all of the different programs that are out there that we're going to talk about from local governments, the state government, federal law, the licensees, products, offerings, and your own business strategies are the biggest opportunity and control mechanism that you have to make sure that you do really well on these CRA exams and get the best ratings. You guys can structure your business to make sure that there is an emphasis on increasing credit and the LMIs, and you have the product offerings and the business strategies to do so, training your staff, making sure that there's an emphasis and being prepared for when the examiners come in and they start looking at the policies and procedures, content of training, you know, lending portfolios, loan logs, and all of that type of stuff, and how that shows, yes, this increased and this helped the LMI locations and borrowers across the state. Number 4, capacity and constraints. That's kind of a generic little bullet point there, but so I'm going to read something, which again, so you know, I'm not just saying something that it's actually written into the rules, the context that provides for fairness. We're not looking at you all as a licensee in a vacuum without any context, without any understanding that you're running a business. So under this rule, it provides that we will consider the covered licensee's capacity and constraints, including the size and financial condition of the company, the economic climate, national, regional, and local, safety and soundness limitations, and any other factors that significantly affect the company's ability to provide lending or services in the state. So again, we're going to be reasonable. We want to know about the environment that you're working in, the economic environment. If the economy overall is down and your lending in the LMIs happens to go down at a proportionate rate, we're going to understand that, okay? Bullet point number 5 is another kind of point on that. When we look at you in an exam, as we do in REMLA exams, we're going to kind of, we do want to compare you to companies of the same general size in terms of resources, under the service test, technology gets involved. Well, how much money do you have reasonably to dedicate towards your technology? So we'll be comparing, the smaller covered companies with other smaller covered companies, the mid-size to the mid-size, larger to the larger, and then looking at the other types of licensees that are out there in Illinois, all as a means to try to ensure that when we evaluate you, we want to be fair. So if we go to the next screen, as we move along here, we're actually going to get to the first test. So the lending test, and this is governed by Rule 220. And I talk about ratings, and this always kind of be aware of that so you know what your opportunities are. I want to start with what you see down there is the second to last bullet point there, where it says no covered mortgage licensee may receive an assigned overall rating of satisfactory or higher unless it receives a rating of at least satisfactory on the lending test. What does that mean? There's an emphasis on the lending test because you're all going to be examined at a minimum on the lending test. When we get to the service test, we'll talk about the exemptions for that. But yeah, so what is the lending test? We're going to talk about that. Again, I think there's a positive aspect and a negative aspect as we look at what you're doing under the lending test. Certainly this is the basic part, origination of loans to either borrowers that fall into that low to moderate income level or borrowers that are on properties that are in a geography that is, falls into that definition of LMI. Innovation is a big opportunity here. You can see that on the third bullet point. But it's not just having innovative systems and very smart business people that really able to know how to think creatively. You have to show that is translated to what you're doing in the LMIs. So it's not just innovation, but it's translation to the LMIs. The middle one is an opportunity there which becomes a little bit more formal and perhaps helpful. Special purpose credit programs. I'm sure you guys are in the business. You're way ahead of us. You know what that means. So those are programs that you can, formally engage in that would, give you the opportunity to get some extra credit, literally, on our CRA exams. And I've got a citation here. The CFPB's got a lot of stuff on this under 12 CFR 1002.8. But there's a lot of stuff out there at both the federal and state and local level for these different types of programs. I'll give you a few examples. Home ownership and mortgage owner assistance programs. Here, a down payment assistance program, a low to moderate income rate reduction program, redlined area revitalization loans. These are the types of things that you can get on your books when you join these programs to get yourself credit for the lending test. This also extends over to things like financial literacy link programs. So programs that pair credit building loans or lines of credit with mandatory financial education, which benefits the LMI population. So there's a formal way to increase your credit opportunities under the lending test under these special purpose credit programs. You see loss mitigation there. Remember, there's a lot you can do in terms of keeping a homeowner in their home as opposed to being foreclosed on. Sometimes this will be helpful for the bigger companies that not only originate loans, but have their formal servicing side where loss mitigation is typically handled. And you know all about the different types of techniques that are available, including, loan modifications and forbearance agreements, et cetera. And that type of stuff does provide direct credit under the lending test. Um, the third party lending, the last one you see there, that don't be confused by that. We're not talking about brokers or, independent underwriting units. That is an emphasis on the limitation that we have, which is important to be mindful of. So when a loan is originated that does provide credit under CRA, it can only be credited to one licensee. So if there is a second lender that's maybe doing some underwriting and is not issuing the commitment letter, only one of those two licensees can get credit on the origination. And when it comes to the secondary market, through the purchase of sale on markets down the stream, it's not the sale, it's limited to the first and only the first purchase of a loan that would be given credit to an institution. So that's part of the limitation on the lending test. I do want to take another minute to look at the very bottom here on this screen, which is in bold. And this is, the evidence of discriminatory or other illegal practices that will adversely affect the evaluation of the mortgage licensee's performance. So this is the negative stuff that I talked about. And because a lot of what we do is consumer protection, it really is, I think, important for us to be reminded that this is obviously going to be a focus for us. So I want to go through, if you look ahead to Rule 240, and specifically in subparagraph C, 1 through 9, I'm going to give you a list of some things here. There's a total of 9 different statutes. Half of them are federal, half of them are state. But this is really to kind of emphasize the authority that the examiners are going to have in terms of looking at your lending activities to make sure that there's not any illegal credit practices and to assure you that we have the authority under the law, both state and federal, to make the findings. So under the state law, under the federal law, you look at the Equal Credit Opportunity Act, and my parentheses here is specifically problems that we've seen out there historically with the discrimination in the appraisal practices tied to the origination of loans. We have authority under the FTC Act. RESPA Section 8, a lot of us are familiar with that over the years. That's specifically tied to what we have as authority under Illinois CRA in the lending test. We've got opportunities to enforce TILA, specifically with the right of rescission and the Federal Homeownership and Equity Protection Act. On the state side, you're all familiar with the Residential Real Property and Disclosure Act, which is where we house our APLD program. We enforce the High Risk Home Loan Act, which has a lot to do with the limitation on costs and fees on loans, the Illinois Fairness and Lending Act, and then Illinois Human Rights Act, Article 4. So there's going to be a potential for discussion of a lot of with the EICs in terms of applying how these various federal and state laws, whether they do it or not, apply in the different lending practices at your institution. So I remind you, if you've got any questions, please go ahead. But other than that, I am ready to move along. How long are we doing that time? Almost a half hour, 26 minutes. We can move to the next screen, which is the service test. Okay, I'm not seeing anything in the chat. The service test. Let me start with the exemption. I mentioned that earlier. Licensees with less than 200 mortgage loans in the last calendar year are exempt from the service test. So some of the smaller companies that are still covered under the CRA, when we come in and examine you, you do not have to be subject to the examiner looking at the service test. Excuse me. And you can and should have the conversation with the examiner to make sure they know. I mean, we like to vet our data. We look at the mortgage call report data in the NMLS system when we put together our exam schedule, and we like to know what the numbers are. But if you get a notice of exam and you have less than 200 mortgage loans in the last calendar year, you do not have to be subject to the service test. So that's the exemption. Now, what if you are subject to it? What are we looking at? Okay, there's basically two prongs to the service test. One is the delivery systems of the licensee, and the other one is this big area of community development. So, delivery systems, what do we mean by that? That's what I was talking about in terms of technology. You can see there on the second bullet point in the parentheses, the internet, your phones, your mail, and, how are you using that technology to make sure that there's an effect on the LMIs. Another example here would be office hours. And another helpful example here on the service side of this test would be the opportunities with regard to branch offices. Under REMLA, you obviously only are required to have a main office. And if you have branch offices outside of Illinois, that's fine, but they don't even need a branch license. If you do have a branch inside of Illinois, it has to be at a commercial location and it needs the branch license. But under CRA, we get to look at it as an opportunity for credit if you put branch offices in the LMIs, therefore clearly making it apparent that you're trying to allow your services as a licensee to be available to the LMI borrowers and for the LMI properties. So branch offices, and that, if you're looking for detail on that, I can also offer Rule 230 subparagraph D. Okay. I think we can, for community development, we've got a few more screens that we can move on to. So there you go. So what is a way to, the first way that I like to think of community development is to kind of contrast that with the lending test. And that is, the lending test is the origination of a loan to put a borrower in a home, usually a single family home. Okay, and that is a big part of what you do. Community development is really anything else that you do to benefit an LMI other than that type of loan, originating that type of loan. So there are very broad parameters, and I view that as opportunities for you all to do things to provide community development and at the same time get great results on your CRA exams, and then enjoy the reputational advantages that would garner for you in the communities. So we can actually we could go to the next screen because we're going to see a lot more detail on the next screen. Be mindful of my time here. This is the last screen for me, everybody, before I turn it over to Ed.
Mike, before you continue, we do have a question. Is the Illinois CRA exam held separately from the regular exam, or are they done at the same time?
Separate. Good question. Yeah, it's going to be separate. We'll have separate examiner staffs doing those respective types of exams. And there's a good reason why they need to be done separate, because when it comes to the report of exam or the evaluation performance report, under REMLA, everybody knows everything is considered highly CSI, confidential supervisory information. Nobody really ever sees the report of exam unless it's the licensee or our department, or in some cases, some other regulators have a chance to see that. And some of these other non-state reports can be produced and actually in the exam, requested and produced. However, on the CRA side, and Ed's going to touch on some of this, and this is true with federal CRA exams and the process. There's a portion literally of the evaluation report that goes public, including the ratings and stuff like that. So there's a big reason as to why we have to separate the REMLA exams from the CRA exams to make sure that any requirement that something goes public is done under the requirements of the CRA, and we're not in violation, which is governed by the CSI stuff under REMLA. So, and I would argue that the CRA stuff is a lot more specific than what's under, we look at under everything under REMLA, a full scale exams, and CRA is very much focused on what's under the CRA Act and rules. Hopefully, did the person that asked that question, I don't know if you have a follow-up. Um, okay, that, I see that on the chat. Okay. Yeah, if you've got any more questions, please, go ahead. So on the community developments, my last screen, you can see, I think by count, there's 8 bullet points there. And this is taken specifically from Rule 230, subparagraph F. And this is where I think this presentation can provide some help, because we can highlight these types of specific examples of what is meant by community development. Okay, so you see the first one, charitable donations. Okay, um, and those that are there to help meet the financial needs of low and income and moderate income communities. Supporting of foundations. Number 3, your own offering of products and services targeted to expand safe and affordable banking services. There's 2 down there towards the bottom, which I think are of great interest, and that is your products and services that can help specifically in the instance where there's climate disasters or needs, things that you can do to mitigate environmental harm. They're expressly tied to the language here of community development and any creative way that you can use your funds or resources to help a community, an LMI community, where there's been environmental harm or some sort of natural disaster, you get credit for that. So not only would you be a good corporate citizen in that context, but you technically get credit under the community development type of scenario. The second to last bullet point is a good one because it touches on something specific to Illinois, and that is by participating in the Invest in Illinois programs or other similar state or federal programs that have the primary purpose. And Invest in Illinois, there's a specific state statute that lays this out. It's 30 ILCS 751. And the design there is more general than just residential lending. It's more towards programs that provide economic growth and jobs in our LMIs. So that is something that is good for the LMIs, and it makes sense that you get credit for that in our CRA exam process. The state treasurer's office, by the way, is the administrator for the Illinois Invest in Illinois programs. So, all right, my voice is getting a little scrappy, so I'm fine. I'm done anyway. So with that, unless there's
Mike, we're going to
question,
pause for a moment.
yep.
We do have a question from Debbie Tresner. Sorry, I
Mhm.
apologize. It's is APLD tied into the CRA exam? If you don't mind, Debbie, if you can hop on and elaborate a little bit more on your question.
I could weigh in on that if you want me to,
Yeah, go
Susanna.
for it, Mike.
Um, Yeah, that's a great question because the APLD is the anti-predatory lending, which kind of touches on what we were talking about earlier in terms of the negative aspects of the CRA and the whole idea of data as it applies to knowing what we're doing in the CRA program. There's a lot of data which is going to define what an LMI is. The Census Bureau has got tracks, and there's metropolitan statistical areas that talk about the city areas with the density, and when we look at the lending, we've got loan logs, we've got the data from HMDA, we've got, and in your question, in your case, we also have the data in the APLD. Now, this is limited to 4 counties, but would it be possible if we're looking at the lending test for a licensee on a CRA exam and we've got questions, could we tie that into a review of the submissions in the APLD? The answer to that is yes. We would be able to do that for better or for good. High level of compliance on the APLD, or something that could be missing, or something that shows a questionable trend in the filings in those 4 counties could potentially be used as a better way for us to understand how to rate a company, particularly under the lending test. So that's a good creative question. I appreciate that one. Debbie, can you elaborate a little more on your, oh, yeah, I don't know
Yeah.
if, yeah.
So Marty said he works with Debbie and the Illinois PLD has examined us in past years. Will they be looped into the CRA exam? So, okay, I think Mike just answered your question, Marty, but you're welcome to expand if you'd like.
Certainly, there's an opportunity for the licensee to go to the examiner and to say, hey, look at, the APLD is 4 counties, but those 4 counties were picked because they have the higher level of LMIs. That's why it's those 4 counties and rather than the 100 other counties in the state. There's a priority there. So you can have an opportunity to take data from your APLD filings to show the CRA examiner, hey, look at what we've done here. We were able to close on a number of loans, and here's X number of loans where there was counseling provided to the borrowers. And literacy is part of the express makeup of the CRA. Counseling is triggered under some, but not all of the filings or loans that are done in the 4 counties under the APLD. So there's an opportunity there to use the APLD positively in the exam process. Unfortunately, it can also be used on that negative aspect if we're looking at trends on, redlining and that type of thing. So hopefully that helps.
Thank you, Mike.
Yeah.
Dara, Marty said he cannot unmute himself. Could you?
Yes, I was just typing in the chat. If you want to raise your hand, I could try to unmute, or I could unmute you right now. Okay, you should be unmuted. Feel free to start.
Hi there, it's Marty Allred, American Pacific Mortgage. Can you hear me?
Yes.
Okay, thank you. Sorry, I just couldn't unmute myself. So I think what I heard is that there could still be separate exams for CRA, for APLD, and for general, origination and servicing. So there could just be separate exams for each of those, or could there ever be like combination exams of any of those 3 components?
Yeah, good question. Certainly, I think the REMLA exams and the CRA exams will always be kept separate for some of the reasons I already noted about some public features of the CRA stuff. And the reality is with our department, the makeup of the programs are going to be done with different staff. We're going to have dedicated examiners for CRA exams, and we have a pre-existing team of examiners that are dedicated to the REMLA exams. We have a separate team that manages our APLD. Carrie Byer, who's with us, does a great job on that. She has a team. She doesn't technically do examinations on the APLD. She will issue information requests. Sometimes if we get a complaint about lack of compliance, she'll go out, she'll want to do a survey of filings. I wouldn't argue that we've got exams under the APLD, but we do a lot of information gathering. And because the stuff is affirmatively required to be put in the data in the database, once it's there, we do a lot of internal review.
Okay, that's helpful. Okay.
I do think, and my last comment there about the APLD, I think it can be used in a positive way in the CRA context or in a negative way. Positive way to say, here are these 4 counties that have a lot of the LMIs. We did, extra lending there, we've really spiked our lending, closing loans in those counties. That's related to APLD, and it's certainly good for conversation with the CRA examiner. The other aspect of that would be, if there's trends of steering of loans, redlining, some of the negative stuff that comes out of the APLD data, that could also be part of our analysis on a CRA exam. So it's kind of a blend. The answer that I have to your overall question, it's kind of a blend.
Okay, great. Thank you so much. I appreciate the explanation.
Thanks for your question. All right, Ed, over to you.
Thanks very much. Good afternoon, everybody. My name is Ed Hill, and I'm going to walk you through the remaining part of our presentation for today. First of all, let's discuss ratings. Ratings are assigned based on the overall assessment of the licensee's performance. Licensees will receive a rating under both the service and the lending test, and these 2 ratings will impact your overall rating. The final rating will impact the frequency of the CRA exam. And what do I mean by that? For example, as a licensee, if you received an outstanding for performance in meeting the credit needs and community reinvestment, that would give a different cycle. If you got a satisfactory, you would have a different exam cycle. Now, if you got into the weeds and you got into what I'll call places you really don't want to go, such as needs to improve or substantial non-compliance, those two ratings would definitely impact the examination frequency and require more frequent examinations. So what am I talking about? Next slide, please. As I mentioned, if you receive an outstanding rating, your next examination will be in 3 years of our report date. If you received a satisfactory rating, the frequency would be the same, 3 years after the examination date. Now, as I mentioned, when you get into the territory you don't really want to be in, needs to improve, that means every 2 years after the report is issued, and if you're really bad, substantial non-compliance, and that's going to be within 1 year of the report. Another thing I'd like to point out with respect to the exam frequency and coordination is that for some larger shops, we may coordinate the examination in coordination with authorities from other states. For example, if you were a large mortgage lender and you did a lot of business in, let's say, Massachusetts, there's a possibility that we could conduct our exam in coordination with the Commonwealth of Massachusetts. The examination schedule, licensees with 100 plus home mortgage loans are discussed under this frequency and coordination. Next slide, please. Again, now for the licensees with fewer than 100 mortgage loans, your exam frequency would be as follows. If you received an outstanding rating, the next exam will be within 5 years of the report. If you got a satisfactory, 4 years after the issuance of the report. Needs to improve, 2 years after the issuance of the report. And if you received a substantial non-compliance rating, 1 year after the issuance of the report. Any questions on any of this so far? If not, I'll move along to the data collection and reporting disclosure screen. Now, there's some mandatory data collection and reporting associated with Illinois CRA for non-bank mortgage lenders. Covered mortgage licensees are required to collect and report for examination purposes the data fields required under the Home Mortgage Disclosure Act. You also need to know that we're going to look at the data collection processes and that we want to test that, and we want to make sure that it's a part of your internal controls to ensure compliance with all data reporting requirements, as well as whatever policies and procedures you have developed internally. The next item is optional data collection and reporting. Covered mortgage licensees may, at their discretion, provide additional information about their lending performance, including additional loan distribution data. Next slide, please. Public information. This is information that is to be made available to the public, and that information is as follows. Public comments. Any public comments that you as a mortgage licensee receives from individuals or community organizations or groups, those comments are to be included in your public file. The next section of the public file is going to have the examination in it. And finally, your Home Mortgage Disclosure Act disclosure statements are to be included in your public file. Now, upon request, as a covered mortgage licensee, you must provide copies of the required information within 5 days. Now, these copies can be provided on paper or in another acceptable format with a reasonable fee allowed for copying and mailing costs. Next slide, please. I'm going to walk you through some tips to ensure a smooth CRA examination process. And before I really get into this, I want to say that we're all kind of feeling our way through this process. So there's going to be some bumps in the road along the way, but we're going to get through this thing. First of all, I want you to note that your exam date is going to be made available on our website 30 days before the start of each calendar quarter. A letter will also be sent to you, the mortgage licensee, 30 days in advance of the examination date with the requested materials. Now, we want you to ensure that all documentation is readily available and have a clear understanding of community development and state CRA requirements. Finally, be responsive. If there are things that pop up during the process that you need some information on or you need some help with, please don't hesitate to contact us. Next slide. Some of the materials that are going to be requested might be familiar to you, given that you've had REMLA examinations, but let me walk through some of these just in case. Uh, First of all, there's corporate and governance records, and these records would include organizational charts of your of your licensing agency, including any affiliates, excuse me, and subsidiaries, board and committee minutes addressing, get this, community reinvestment, lending, or compliance. Next, any policies and procedures that you have related to fair lending, uh, Illinois CRA, and community development. The next thing we will be looking for would be your lending and credit records. Some of these records might be familiar to you, such as loan logs and origination data. This would be for for residential mortgage loans and, if applicable, small business and small farm. The next thing we will be looking for are the loan application files, and it's important to include any denied and withdrawn applications with these files. Next, loan distribution reports, which I'm sure most of you might be familiar with, and these reports would deal with the geographic, borrow income, and loan type of the different loans that you originate. The geography will be if it's in a low, moderate, upper middle income census tract, borrower income, the borrower's annual income, and that data is usually captured under the HMDA, and also the loan type, what type of loan was originated. The next piece of the lending and credit records includes any loan modification records that you might have, especially those for low and moderate income borrowers. Next slide, please. As you can see, this is a very extensive process. The next part would be assessment area and community information. What will we be looking for with respect to this bullet point? Well, maps and descriptions of your designated assessment area, any demographic and economic data that you might have. Now, sometimes you may, and I would strongly recommend this since this is new for all of us. For your shop, I would recommend that you put in place some internal CRA analysis. It's one thing to have the examiners come out and point out your demographic and economic data, but I would think it would be very valuable for you to know that before the examiner steps on site, so that you have your hand on that information. You'll know what's going on with respect to the demographics in the assessment area you serve, and as well as the economic data that affects that area. The next thing we would like to see would be community needs assessments or market studies. Again, something done internally that would show us that you are taking that extra step, if you will, to find out what the community needs are of your assessment area. The next item would be public file and disclosure materials. As I spoke of earlier, your CRA public file as required under Illinois CRA. We'll be wanting to look through that. Notices that you provided to the public regarding your CRA performance and rights, and any records of public comments that you received and your response to those comments as well. Finally, under community development activities, we would like you to have documentation of any community development loans and investments and services that you performed, records of any partnerships with community organizations, nonprofits, or local governments, and finally, evidence of any financial literacy programs, affordable housing initiatives, or small business support that you initiated during the review period. Next slide, please. Also, part of the requested materials are going to include compliance and monitoring documents. For example, internal audit reports related to CRA or fair lending, compliance monitoring reports, and corrective action plans. Perhaps you have someone, a third party come in and perform an audit, and that auditor recommends that you take some corrective measures to address problems that were identified during their audit. The next thing would be training materials, and this is very important because we want to know what your staff knows about CRA, fair lending, and consumer protection laws. So we would want to know what type of training did they receive, the content, how long the training lasted, and who was involved in the training process. The next thing that we're going to request would be regulatory and examination materials. I've heard it, and I don't know much about it, but I've heard that REMLA is a very important part of your mortgage licensee operations. So one of the things that we're going to be looking at in terms of CRA is your REMLA reports to see what type of operation you're running, if you have any issues or problems, or what's going on with the management of the licensee. The next thing would be policies on examination, cooperation, and record retention. Again, anything that you have developed in the course of complying with Illinois CRA, we want to see those records. And I want to point this out to you as well. The final bullet point here is that under our regulations, Secretary may require examinations of any books, records, documents, and operations of the mortgage licensee, its parent subsidiaries or affiliates, and may take under oath any testimony. Licensees must ensure that all officers, directors, employees, and agents are available for depositions or interviews with reasonable notice. Any questions out there yet? All right, let's go to the next slide. Mike mentioned earlier the pre-exam letter, and the pre-exam letter is a pretty extensive document. Let me walk you through some of the highlights. First of all, the examiner in charge will contact you within 2 weeks of the on-site exam to request some specific information from you, to let you know how long the team is going to be on site if necessary, and work out any other logistical information. Another important aspect of the pre-examination letter is that we're going to request a set of instructions and information and a document request list, a set of any forms that you use, and also, as I mentioned earlier, we're going to look at your loan laws covering Illinois loan applications taken during the examination period. The EIC will also identify other documents that can be produced on site. Now, be aware that as the exam progresses, the EIC may request additional documentation beyond those that are identified in the pre-examination letter. So again, this is a very extensive document. It's going to be at least 20 pages. So I know I'm feeling your pain, but again, it's very thorough, and we want to make sure that we get everything that we need to get as soon as we can get it, because we don't want to be a burden to you. And if we get everything that we need in a good fashion, in a good order, that could lessen the amount of time that we spend on site. Next slide, please. Template. Let me walk you through our performance evaluation template. Your CRA evaluation report will contain the following. There'll be a scope of examination letting you know what exactly we looked at, and how we developed the sample sizes and things such as that. Also, the period that we're going to be examining you over. I would think it might be your last 2 years of originations and things such as that, but some of those items are still being worked out. The next item would be your mortgage lender CRA rating, performance context. And what do I mean by that? I mean, as Mike talked about earlier, we'll be thinking about the constraints and the things that may have affected you as a business. What's going on in the assessment area that you serve? What's going on in the city, in the state, or the country? And those different aspects do have an impact on the performance. And I also want to point out that although we have examination templates, no two exams are alike. And what I mean by that is no two mortgage licensees are alike. We don't do cookie cutter CRA examinations. We evaluate each licensee on their own record and what they do. The next area of the template will cover conclusions of the service and lending test, and these items would include the geographic distribution, borrower characteristics, innovative or flexible lending practices, any efforts you've taken to prevent loss mitigation. We're also going to do a fair lending review, as Mike spoke about earlier during his part of the presentation. And this is something new, a minority application flow. This is this piece we picked up when we reviewed the Commonwealth of Massachusetts mortgage CRA program. So they use a third-party vendor that we use, and what the minority application flow is, they're able to take your home mortgage data and using your assessment area and all of the things that are put in the home to data fields, we'll be able to produce a report which would show us how you're reaching out to the minorities within the assessment area that you serve. And the final thing would be any records or discussions, any exhibits that you could provide us with regarding the loss of affordable housing in the assessment area that you serve. Next slide, please. Finally, there are going to be some notices that you will be required to have. One notice should be in your main office. And if you need to find a copy of that, you can go on our website, and we have copies available there for you to look at. So there's going to be one particular notice for the main office. Next slide, please. And for each additional full service, get this now, additional full service office, there's also a notice requirement as well. So again, two separate notices, and you want to look at copies of those notices, please go to our website. Any questions out there that I can answer? Well, thank you very much. That concludes my portion of the presentation for today.
Thank you, Ed. And I just want to point out to everyone that if you do have any questions, you can email us at fpr.cra.mortgagelicensees@illinois.gov. We will respond to you via email if you do have questions after this presentation. We'll wait a minute to see if anyone has any questions. Okay, you're welcome, Marty. Seeing that there are no questions, this concludes our presentation. Thank you so much for joining us.
Thanks, everybody.
Thank you, everybody. Have a nice